What's up, Beds?
We're back, baby. What's up with Randy?
Oh, not much, pal. Beautiful day up here in Maine. Nice, cloudy, overcast, cold day. Love it.
Yeah, man. Let's just get all of the rain. Let's just be trapped in the house. Let's do zero outdoor activities. Sign me up.
Well, you know what's good though? You're going to be going. So we're recording this a little bit early. I'm going to be posting it next week by the time you hear this. But you're going to Florida in a few days. You're going to
Yep.
get back, and then I'm going to go to Florida. So the
Oh,
band won't be
really?
back together until end of April, probably.
Man, I'll see you around Christmas time, Ran.
Yeah, have a great summer, dude.
Yeah, you too. All right, the podcast is over. Thanks for listening, guys.
But we're back, mortgage show, baby. So a lot of stuff to talk about in the mortgage world, as always. I mean, the months just fly by. I can't believe it's already second quarter now. First quarter's done. Now we're just grinding. It's April. So spring market's heating up. Hopefully it's a good one for everybody. And we're just going to share some news, some mortgage stuff for people, and go from there.
Let's do it.
So, Beds, you want to talk about interest rates? Because
Yeah.
I'll just kind of set the table. It's been a decent enough run for mortgage rates. Some bad days here and there, but today's a good day. There was more of that tariff talk yesterday, and this will be a week old by the time it posts. So I'll be interested to see what happens in that period of time. But as of what is it, Thursday today, April 3rd, rates are having a decent day with all that fear.
It seems like this administration is just putting in a couple things that are it's really trying to drive down the interest rates. It's it's apparent that the question is how far is it going to go? So today is a very nice run, like you said. We had some tariff news, so it seems like some of that stuff is starting to shake out a little bit. So the market is liking it. You know what's funny though, Randy?
What's that?
It's like normally you have like a positive result here with the tariff stuff. Normally money would flow into the stock market because it's a little less uncertainty, but there continues to be a sell-off everywhere. So, when you've got a sell-off in some of the more riskier assets like the stock market, they tend to flow into bonds, which back our mortgages. So as a result, another good day for mortgage interest rates. It's nice.
Yeah.
It's There's a lot of hope there that, they're going to go down a little further.
Our last
Yeah.
video was is a refi boom coming, and we're inching closer that way, man. It won't be that long if it keeps on this trajectory. So I do not like to see all red when we're looking at the stock market, the ticker,
Oh,
and all
no.
that. And that's what we're seeing today. But the silver lining has always been, since we've been in this industry, that bad news for that sort of stuff is good news for mortgage rates.
It's you can see where the money's flowing. Bonds, metals. This is the pattern that I was used to in the couple other prior environments earlier in my career when you could see like some uncertainty in the markets. So, I guess maybe buckle up for us. We'll see.
Yeah. And honestly, reach out. We're always happy to talk about mortgage rates and what we're seeing and price scenarios out and all that. So definitely reach out if there's any questions that you have. Before I get too far along, I did this in the other podcast, and I want you to chime in too. But if you could do us a huge favor, if you're listening to this on YouTube, like the video, comment on the video, subscribe to the channel. If you're listening on Spotify or Apple, do the same. Follow or share with someone. The more interactions that we get, I think the more the algorithm likes the pod, gets a further reach. So we appreciate that support.
We love the support. And I guess didn't you say the numbers were pretty nice on the last one? So I'm
Yeah.
pumped that people are listening to this. Thanks everybody for the support.
Yeah, no, we were pleasantly surprised, man. That was the most listened to one we had by far. And just, I don't know if it just got into, again, the YouTube algorithm, but a bunch of people were listening to it, which was cool. So we'll keep spreading news and mortgage info.
Speaking of the algorithm, I really wish I knew what it was.
I think a lot of people did. Yeah, do. We're always trying different things and hashtags and titles and thumbnails and all kinds of weird stuff. But big thing is just being consistent. So we're doing it every month and always love the feedback that we get from it.
So rates are heading lower.
Yep.
Where are we going next?
There were some announcements in the past week to USDA loans and FHA loans. I'll kind of lead the way on this and feel free to chime in. But big news for non-permanent residents in the United States. Up until now, you could always get an FHA or USDA loan if you had a social security number, credit score, job history. Like those people were able to get mortgages in the United States. Last week or earlier this week, there's an announcement after May 25th of 2025 for FHA loans. That will no longer be possible. And then with USDA loans, That's not possible as of right now. That change went into effect immediately. So I tend to work with agents that are in with new American populations, and that's really the people that it affects, unfortunately. I've been trying to spread the word on this with them so they know that these type of loans, which is probably what they've done to buy a multifamily property for them, or just use main state housing, something like that, that's not going to be an option. I mean, they will be able to qualify with conventional financing, but when it comes to these type of government loans, the FHA, USDA, after May 25th, it's not going to be an option anymore.
Man, one thing is consistent is change in this industry, isn't it?
It's always something.
It's always something. Administrations change, policy change, and here's the result of this administration. So I don't know what's going to happen with this. We'll see. We'll see.
I mean, I can't say it's not a huge part of my business personally, but I know that there's a lot of new Americans that are trying to buy homes, and this is the avenue that they would go. And again, I know plenty of agents that work with that population, and they're going to be the ones that are going to be impacted the most. So it's good to know about it now, because what you don't want to have happen is you have a pre-qualified buyer, they're searching, like I have a pre-qualified FHA buyer that as of May 25th, all you have to do too is not close by May 25th, it's get an FHA case number by May 25th. But this person basically has to find a house, put it under contract, get this FHA case number, or it's going to be an issue for them after that date. So it's just trying to spread the word now and educate people so they know that it's coming.
Yep, good one on that. Everybody needs to know it.
Yep. You want to talk about appraisal waivers? I know you heard some news lately. What's the latest with that?
Yeah, so this goes in the area because, we're hitting the spring market. Things are going to start getting competitive. This is just another tool in the toolbox to help agents out with offers. This is a Fannie Mae decision. So if you are a higher FICO score borrower with 10% down on a primary residence, if you're an agent out there making an offer with that type of buyer, it actually might be a benefit to you to sort of reach out to us and have us run the transaction with the property address on the property that you're going to offer on to see if we could get a waiver.
Yeah.
Lowers the cost, obviously, for the borrower, no appraisal costs, and speeds up the process because we're not waiting for an appraisal. A couple other things on it. Investment properties, you can take advantage of that, but you have to have 25% down.
Yep.
For the people looking to refinance, we could do it with 30% equity. So that's a 70 loan to value on primary residences,
yep,
and a 60 loan to value on second homes and investment properties. So that's a nice little wrinkle.
Yeah. The benefit of not having to get an appraisal is, of course, the cost. Whether it's $700, $800, that's money in the borrower's pocket. But beyond that, transactions are smoother. We're not waiting for an appraisal to be done. So timing is impacted. Sometimes when appraisals are done, an appraiser would note some issues with the property, deficiencies that have to be addressed. That gets taken off the table. So I can't think of a scenario why you would not want an appraisal waiver if you had the opportunity. So it's only a good thing if you can do that. So the more people that have the opportunity to do that, the better.
Might be a decent segue to the conventional loan stuff that we have in the notes.
Yeah, so I have a deal going right now, and I think we've talked about this on previous podcasts, and I did not realize this too, I should say. So it's a learning for me, and there's always something to learn. So I have a borrower that wants to make an offer, or made an offer, and ultimately has gone under contract on a home that didn't have any electricity on, and the utilities were all turned off, heat, water system, all that stuff just shut down. So my first thought is we cannot move forward with that loan. They need to turn that on in order to get an appraisal done and closing the transaction. Come to find out, with conventional loans, you do not have to have the utilities on at the time of appraisal. So it's obviously a risk for the buyer, right? Ideally you would have them on so you know that they're functioning, but the reason you're paying the price you are is probably reflecting the fact that those things aren't on. So you're probably getting a decent deal. It's a unique kind of property. It's maybe owned by an estate or on the verge of short sale. So that's the reason those things are turned off. So you're probably getting somewhat of a deal and you're willing to accept that risk. But these people were like, yep, that's fine. I don't care if we don't have to turn the utilities on. Let's move forward. So I have not gotten the appraisal back. The thing that we would be worried about, or anyone would be worried about in this situation, is an appraiser visually observing something that is a red flag for them. Not necessarily with the electricity being off, because there's not really that much to observe there unless there's dangling wires all over the place that are clearly disconnected. But with the water system, if they look at the furnace, if they look at the piping and something's missing, that would be an issue, right? If there's no water turned on because there's no pipes, that's not doable. But if it's just not turned on right now and it's not powered up and the appraiser goes and everything looks like it's intact, they note that in the report, and conventional financing allows for it. So it's a pretty sweet deal.
Cook, Randy, cook, baby.
Yeah.
You're feeling it right now.
Uh,
um, another way to say it too is like so. The product allows the utilities off. So what if there's an issue with the utilities? If you're trying to use this in a way to be sort of creative to get the transaction closed, a more direct way to say it is if there's something obvious there, if an agent brings something up to the appraiser and says, hey, look, utilities are off and here's why, it's probably going to be noted in the appraisal report. So the thought of non-utilities on to try to get the deal through if there's an issue, anything could come up with that in so many places, right?
Definitely. So it's not a guarantee, but I think in this case, set the right expectations of the borrower. They know that there's a chance that there will be a problem. We might have to pivot to a renovation loan or figure something out, but there's no other way for them to finance this place at this point. So we're rolling the dice and we're getting an approved loan, actually in pretty good shape. Appraisal's due on next Wednesday, so I'm hoping that it comes in pretty good. I'll keep you posted, but it was a learning for me. And if it all works out, then that's just like a great way to do a loan on that type of property.
As is stuff, conventional loans. What's your thought on that? Sorry, I've run into a scenario recently where some physical condition stuff, and I think you've got a story about that also on conventional loans.
It's happened a lot. So okay, what you're talking about, and I'll let you cook, Beds.
All right.
When we get an appraisal done, it's either by the appraiser, it's either as is, meaning like the condition's fine, there's nothing that needs to be done, as opposed to subject to. Like this report is subject to the roof being done, the house being painted, something being finished, right? Like the value will be this subject to those things completed, as opposed to the value is this as is, the house is already good. So sometimes, I should say, when we get a subject to appraisal, that's not good, right? That means we have to figure something out, negotiate something, someone's going to do some work. On the other side of things, most of the time when it's as is, that means we're in good shape. It's as is, we don't have anything we have to worry about, but not always. So why don't you talk about that part, Beds?
Yeah, so this is an FHA versus conventional conversation. So the simple example is you're flaking paint on an FHA loan is probably going to come back subject to scraping and then repainting. So on the conventional loan, that's more probable than not that's not going to come up. The conventional appraiser's not going to sort of ding the appraisal report for that. But like, what happens if other types of things comes up? So I got a call the other day from an agent listing a property. He's like, hey, Chris, why is this happening? The borrower's financing. I also had a scenario happen months back where in one of the units of an investment property, the ceiling was actually collapsing. It was like one of those, you have the grid systems with panels, but then you also have stuff that's strapped and you have these like sticky tile scenarios that you can put in. And it was sinking. And for
Did the
me,
report come back as is at first?
no, it came back as subject to, I'm sorry, my apologies. It came back as is, but the underwriter saw it.
Pictures.
In the pictures. And look, the appraiser said as is, but the appraiser put it in there to show, hey, this report is as is technically because it's a conventional loan, but underwriter here, you might want to look at what I'm seeing in this unit with this ceiling tile scenario. So simply in my case, it was just the adhesive was not sticking anymore and the tiles were sagging and they just needed to go back in there and sort of glue them and take a photo because the underwriter requested it.
Yeah.
Another scenario was some additional. So the agent that called me the other day, it was an appraisal report that had several things in it photo-wise, but the report came back as is. And the underwriter actually looked at those items and said, hey, we need these remedied regardless of the as is in this appraisal report. These are physical condition things that I'm seeing that I don't like. So we're in the field area. But, the underwriter felt that they needed to be taken care of. And it was an interesting conversation because this doesn't normally come up. So you do want to be cautious on physical condition things,
Yeah.
So
Historically, I used to just, when I would get an appraisal, I'm not an underwriter, so it's not my job to go through a 20-page appraisal and try to pick it apart and try to identify things that are going to be a problem. But what I used to look at was price and then the as is or subject to line. And when that came in, I would tell everyone involved, hey, just let you know the appraisal came in, value looks good, it's as is. I'm going to submit to underwriting now, but I think we're in good shape. Now, like, I think I changed my language a little bit because don't want to overpromise there, because I had the same thing happen. I had a conventional appraisal come back a couple months ago on a deal as is. When you really dig into the pictures, there's siding missing on the side of the house. There's like a ramp up to one of the bedroom windows on the back of the house, which I hadn't even noticed. That had to be demolished per the underwriter. So if you're listening to this, if you're a realtor, just because you have an as-is appraisal doesn't mean that an underwriter won't look at it and identify health and safety issues that have to be addressed. So that's basically what we're getting at.
It's interesting too, because there's like, the agents have anxiety points in their transaction and their mental checklists of where things are. That's a big one for us. We check the value, we check as is or subject to. And how many times do we actually read through the rest of that report? Do I want to admit my ratio? Probably not. Randy, do you want to?
Well, I mean, we're just not underwriters. So
Yeah.
it's not like, it's just not my thing. Like, why would I try to spend a half hour tearing apart an appraisal to identify problems or say that it's okay when it's not my job? Someone else is going to do it, and they're going to do it within the next few hours anyway. So, if anything, it's just kind of setting that expectation when it comes in that, like, hey, the report is as is. But again, underwriter has to review this. They could see something in the pictures that's an issue. You have to use your discretion too, because I mean, if I have someone that's buying a $900,000 house and it's built in the past like 10 years, an as-is appraisal is probably a pretty good thing. But if you're buying a 40-year-old property that looks a little bit rough in maybe some rural area, an as-is appraisal might not ultimately be an as-is appraisal.
You dominated the way you said that. I guess my final thought on it is although we're saying what we're saying about value, and if it is as is, just know at the end of the day, the underwriter, is the iron fist and everything. So
yeah, just blame it on the underwriters.
Yeah, it's the underwriter's fault.
Yeah, totally. They're totally unreasonable.
I love this sort of stuff too, because it creates the environment on, if your lending platform is difficult to get loans through, you know what I mean? It really just boils down to a human being reviewing a report and providing a decision. And at the end of the day, who controls that? The underwriter.
Yeah. Yep. So, okay, moving on from the appraisal stuff. Big
Moving on.
news in the mortgage industry. Rocket Mortgage is acquiring Mr. Cooper for $9.4 billion.
Mm-hmm.
So Rocket is that big online lender that everyone hears about. Mr. Cooper is a big servicer. I think there was a time when we worked at Norcon that some of our loans would be sold or the servicing would be transferred over to Mr. Cooper. Now Rocket's buying them and just further consolidating the business. They already own Redfin, which people may have heard of before, a real estate company. So they're making moves.
We're walking down this area of consolidation. When I first started my career, there were an innumerable amount of servicers. So that's where you pay your mortgage after it's closed. Man, I could tell you, you could see it since you started your career. The servicing industry has really shrunk, hasn't it?
Definitely.
It really has. So this is a big move by them.
Yeah, it's a lot of money.
It's a lot of money. It's a lot of money. Imagine having that money.
It's an interesting thing I'm reading here. So I guess Mr. Cooper is the number one servicer. Rocket is number 2 in originations. UWM must be number 1. And now they control 1 in 6 U.S. loans, I guess, now after this, which amazes me because everybody freaking hates Rocket Mortgage, right? Like, like they obviously are this big company. They do a bunch of mortgages, but anytime a borrower makes an offer with a Rocket Mortgage pre-qual letter, they're like, why don't you call Randy? Why don't you call Chris? Why don't you call somebody local? It's like, how can they be so big and so good, yet everybody in the Southern Maine market, and I assume many local markets, don't want to work with them because they're a 1-800 number call center?
It just speaks to the consumer's tendencies, though. A lot of us are online. I know that we have the local markets where you said people tend to push it to us, but man, it really just does expose simply that people hop on apps.
Yeah. And they're fine putting in their information, interfacing with a computer, or someone that's just a voice on a phone. I mean, we're a voice on a phone too, but someone that could just be honestly anywhere in the country, and they're fine with that. So it just amazes me. 1 in 6 loans in the United States is part of this company.
I'd be interested too, Randy, because like the people that are smarter in the room than me, as far as analyzing risk and rate of return and stuff like that, number one, I wonder how long this has been negotiated, right?
Mhm.
Number two, the reason why I wonder that is because you're paying such a big amount of money for a book of business, where if these interest rates are actually going lower, they're buying assets that have higher rates the last 4 years, and they're paying a premium for those. So that's probably an asset it's going to be devalued now in the refinance market. So
Yep.
I'm kind of curious of the timing of it. And like I said, the smarter people in the room probably, I'm probably overlooking something
Yeah,
super, you know, that makes
it's
more
definitely
sense.
big news, though.
Yeah, it's huge
Def-
news.
Definitely big news. That's all I had for mortgage. I don't know if you had anything else that you want to share mortgage news wise. If there's anything that I might have missed in the past few days, that might honestly be it.
I think I think it's just nice too, where it seems like some inventory is starting to hit the market.
Yep.
So hopefully we could start getting some of these buyers under contracts. But yeah, for me, the good news that rates continue to lower. Hopefully we're going to start getting that dual purchase market going with the refinance market. And 2 years from now, we could retire.
Hey, we're not doing this past 50, right? Which is not that far from you for you.
Oh
So,
my God, can you imagine? No, we're going to retire in like 2 years, you and I.
all right, that's all I got, dude. I guess I was gonna do a little story time, a little tooting my own horn or tooting CMG's horn for right now in a transaction. I don't know if you had any type of stories like that you want to share, but I'm in the middle of one that should be closing out tomorrow that I figured I'd bring up
Bring it up. Let's
if
hear
you're
it.
cool with that.
Yeah.
So I got a deal that a borrower is moving from Vermont. Got to sell their house to buy closing in Bangor. Awesome borrower. Like anything you ever ask for them, they're quick to sign things, quick to provide documents, no real pushback, which is nice. I mean, that's what you want. You don't want people that question every single thing in a combative way, which can sometimes happen. So, anyways, awesome borrowers. Loan's been cleared close for 3 weeks, right? It's closing Friday. Tuesday, come to find out the sale of their home has fallen apart. And we're closing in 3 days. They're putting multiple hundreds of thousands of dollars down in proceeds from the sale of that home to buy this next one, right? So it's like, oh my God, what are we going to do? So before I get to that part, I should say the reason the other deal fell apart is because the borrowers, one of them is a traveling nurse. And I don't know if you've been having these conversations a lot lately or hearing about this. I feel like I have. I don't know exactly where, but anyone that has variable income and a traveling nurse is a perfect example of that because it's contract to contract, different pay structures, different hours. You need a 2 year history. And if the next contract's lower than the one before that and it messes with all the averages, anyways, they got a new contract right at the week leading up to the closing and derailed the whole thing. So deal fell apart.
What was the issue though? Was it declining income?
You
First
know,
paycheck from that?
so obviously I'm like removed from the picture, so I
Yeah,
don't fully know. They did
yeah.
try to connect me with the borrower, and I did get some information from them, and it did sound like the pay structure was less for the next contract. I tried to get all the information and send it into underwriting so they could review it and see if the lender that they were working with miscalculated something. Those people decided to pump the brakes a little bit, and I've kind of moved on to the borrowers that I've been working with. Happy to obviously help if it comes back on the table, but I never got 100% clarity. I just know that the company that they were working with before, which it sounds like a smaller mortgage brokerage in Vermont, just basically 3 days before closing say, hey, we can't close, sorry, and then kind of sent them on their way, which is unfortunate. So it's like, what do we do for these borrowers that are traveling from Vermont? They
Mm,
think they're closing on a house. So what ends up happening is we quickly find someone to rent their house in Vermont that they were trying to sell.
hmm.
So got a lease, first month's rent, security deposit. We are sourcing some money for them now, down
Yep.
like some additional down payment funds. We're paying some things off, and we're able to get the debt to income ratio below 50%, where we can make it work with only putting 5% down. So instead of putting 300 and something thousand dollars down, they pivoted to 5% down. Payment's going to be up a lot higher than they want to, but they qualify. And they got all this stuff done in 2 days. Emily, our processor, worked her butt off to do this. We had an underwriter named Andrea who's awesome to get this all done. Everyone understands the urgency of the situation. And we went from, oh no, we're not closing on Tuesday to, I think I have a solution on Wednesday. Here we are on Thursday, clear to close again, and we're closing on Friday. And outside of a little bit of stress for the borrowers,
Mm.
it's closing right on time when we always thought we would be. So really proud of the team for that one. I think that's one of the things that CMG does real well is pulling together deals like that at the end.
So a compliment to you on this one is just being creative enough, or really just kind of separating yourself from the area of like, oh my God, the sky is falling. Let's actually get in the lab. Let's cook. Let's see what's going on with this. Can I separate debts? Can I reposition this? So good job. So to reiterate, you went from, I mean, you just, actually, I really like how you handled that, man. Good job. Getting the lease involved to net out the payment really kind of made this happen for you.
It
Yeah.
covered the mortgage payment, right? Because I think they had like a $2,200 or $2,300 a month mortgage payment. Oh no, we can't sell that house anymore. Now we have to factor in that $2,200, $2,300 debt into their debt to income ratio that we didn't have to when it was being sold. So it's like, what do we do? Well, we could rent it. And then part of me is like, how the hell are they going to rent it in 2 days? Like, how are they going to find a renter that is willing to sign a lease, pay a month's security, pay a month's rent, pay a security deposit, and do that all in less than 48 hours? And as soon as things fell apart, the buyer reached out to their Vermont agent and was like, "Hey, what do we? Do you know anyone that would want to rent my place?" And I'm like, "Actually, we have someone that needs short term, like a place," and connected them, signed everything. I mean, we already have proof of all the money and stuff and a signed lease. So it was just that was the. It can sometimes be easy to reposition debts and get new accounts and statements. Those are things that you can go online or go to the bank and get, but finding a person to sign a lease and give you, I think it was like $6,200 because a $3,100 a month rental with the security deposit times two, to do that in that period of time was like, kudos to everyone involved, kudos to the borrower. And they're already here from Vermont right now, ready to close tomorrow.
That's a good job. That's a really good job.
Yeah.
So I have one that I just took in that I started yesterday. Got the deal. I do have the deal now because so I'm affecting a couple deals with this. So I'm trying to get a borrower under contract, and they are looking to rent out their property, but also sell mom's property at the same time. So they have a larger down payment for this offer that they're trying to get accepted. So behind the scenes, there's posturing and negotiation, blah, blah, blah. How are we going to make this happen? Blah, blah, blah. So one of the parties applied for a mortgage, not with us, to see if they could buy the home that would provide all of the proceeds. This is a whole family circle here.
Yeah.
So the bank denies them. I get a call late yesterday afternoon. Chris, here's what's going on. Trying to get this offer accepted, but they will only accept it if they know somebody's pre-approved to buy the house that would create the large proceeds to allow this transaction to go through. Yeah. So I get the application. And actually, one side of it looks amazing. The other side does not. I needed the other side to make the DTI work, which is what I thought initially. So I take a look at it. You have to go through a process of separating the applications. I got rid of the lower credit borrower, deleted that, had to go into the credit repository and kind of separate that credit report. So I'm now only looking at one side of a borrower's credit. And, after sort of a couple of things with maybe a gift of equity, paying off a couple of accounts with the money that they do have, I ran the loan FHA. The DTI was between that 50 and 55 back end area, but I made it work. And I gave the final news this morning, and now everything is like fast forward. I got one deal. Yeah. So it's like, I think for us, this speaks to the fact that we've been in this for a while. We've seen so many transactions, and we could sort of pivot quickly.
Mm-hmm. Nice job.
Thanks.
Gift of equity is a thing that I've priced out a bunch of scenarios or like put together scenarios, but never actually executed on them. I think I did one maybe like 10 years ago. So it's a sneaky little thing that I think people overlook when it's a family kind of scenario.
Yeah, it's really nice actually.
So love, man. I find that deals lately have been harder and harder for whatever reason. I don't know what it is. It might be just one of those runs that I'm in, but like when a deal comes in, you just got to plan on there being this one thing in the middle of the transaction that you got to figure out and move on from. And I think that that's kind of what we're good at. So it's fine, but it's the super vanilla deals that are smooth from beginning to end are a little further and farther and fewer and farther between.
Yeah. Where are we?
You know what I mean.
I do. You know what I did like? When we were Norcom, we had really good intimate like relationships with people, but there was always this area of like, hey, sky's falling. I need to reposition this loan. Can you help me with this? And you know how that goes. You got to go back in line. You got to kind of wait. And as an LL, you're sitting there for a period of time and anticipating anxiously to give the updated news to the real estate agents to see if we can pivot on this. This is not a knock on Norcom, because I love my Norcom people.
Mhm.
We got a lot of loans done, but CMG has a pace to it when you need to pivot like I've never experienced in the mortgage business.
It's like all hands on deck.
Yeah.
Like I was talking to different management people over the past couple of days for this deal. Like it's no big deal. It's like they don't have about 10,000 other fires that they're putting out at once, and it's like they treat this transaction like it's the only one that they have to deal with. Like it's the priority. It's just wild. It's awesome. So it gives me a ton of confidence to get things done, even when you get bad news.
Yes. Yep.
So. All right, dude. Well, good work with that. That's all I have, man. We'll maybe keep it short this week. We're going on vacation. April's a vacation kind of month.
Yep.
But that's the stuff going on for us and in the industry right now. We can regroup next month.
Let's do it.
All right. Well, thanks for listening, anyone. We appreciate the support. We will catch you next month.
See you guys.